The used boat market is imploding. Dealers cannot move inventory, private sellers are taking massive losses, and 6 major brands are facing a reckoning that could reshape the entire industry. Why are boats that seemed like safe investments suddenly worth 30% less? And which brands will not make it through this collapse? Stick to the end, because this will get interesting. The used boat market used to follow simple rules. Boats depreciated slowly, and quality brands held value well. A well-maintained cruiser might lose 10 to 15% in the first year, then level off. Buyers paid fair prices, and sellers recovered most of their investment. From 2010 through 2019, the market stayed stable. A 4-year-old boat typically sold for 60 to 70% of its original price. Premium brands like Boston Whaler and Grady White commanded even higher resale values. The secondary market worked predictably. Dealers used trade-ins to keep inventory fresh. Private sellers listed boats in spring and sold by summer. Lenders financed used boats confidently because values stayed consistent. The whole system depended on gradual, predictable depreciation. Boat shows and marina bulletin boards connected buyers and sellers. Word of mouth mattered. Reputation protected value. A boat from a solid brand with good maintenance records found buyers quickly. The used market felt safe and logical. Then 2020 changed everything about how boats held their value. The pandemic created artificial demand that warped the entire market. Suddenly, everyone wanted a boat. Dealers sold everything on their lots. Used inventory vanished. Desperate buyers paid above asking price. Some boats sold for more used than their original sticker price. Industry data shows used boat sales jumped 47% in 2020. Prices climbed 23% above pre-pandemic levels. Boats that normally depreciated actually appreciated. A 2018 center console worth $45,000 in early 2020 sold for $58,000 by summer. That surge masked growing problems. Production quality dropped as manufacturers rushed to meet demand. New boats hit the water with defects that would not show up for 2 or 3 years. Buyers financing at the peak locked in inflated values as collateral. The spike also created a huge bubble of 2020 to 2022 boats. Millions of first-time buyers purchased during the frenzy. Many overpaid. Many chose brands based on availability rather than reputation. Many financed boats they could not really afford. By late 2023, the flood started. All those pandemic boats hit the used market at once. Owners who paid premium prices now faced a market with normal demand and massive oversupply. Values began falling fast. Early data from 2024 showed the crash accelerating. Used boat listings jumped 38%. Average time on market doubled. Price cuts became standard. The hidden shift from artificial scarcity to brutal oversupply was complete. Consider what happened to Bayliner S Trophy Series boats from 2021. A dealer in Michigan took in 12 Trophy Center consoles as trade-ins between January and August 2024. Every single one came with problems that owners never expected. These boats originally sold for $38,000 to $52,000 new. Owners reported engine issues within the first 24 months. Electrical systems failed. Gel coat cracking appeared early. Transom flex became common. The boats looked good, but hid serious defects. When these owners tried to trade up or sell, reality hit hard. Dealers offered $22,000 to $31,000, 40 to 50% below what owners still owed. Private party values sat even lower. One owner owed $46,000 but could only get $28,000 in offers. Warranty claims tell the story. The 12 boats generated an average of $4,300 in warranty work each, but many problems surfaced after warranties expired. Owners faced repair bills between $3,000 and $8,000 for issues that should never happen on nearly new boats. This pattern repeats across the country. Boats built during the production rush carry hidden defects. Owners discover problems just as values collapse. They are trapped underwater on loans, unable to sell without huge losses, and facing expensive repairs on boats that are not worth fixing. The trophy case study reveals the toxic combination destroying the used market: rushed production quality, oversupply, and collapsing demand. Dealers believed the pandemic surge would last. They ordered aggressively. Manufacturers ramped production to record levels. Floor plan lines expanded. Everyone bet on continued growth that never materialized. In 2021 alone, boat manufacturers delivered 398,000 new units, the highest number in 13 years. Dealers filled lots with inventory. They took deposits on boats not yet built. They hired extra staff and expanded facilities. The excitement felt justified. First quarter sales in 2022 stayed strong. Boat shows drew huge crowds. Manufacturers projected another banner year. Nobody wanted to miss out on the boom. Dealers kept ordering. But the boom was already ending. Rising interest rates hit in March 2022. Gas prices spiked. Inflation reduced discretionary spending. The wave of first-time buyers had already purchased. There were not enough new customers to sustain the volume. By late 2022, dealers faced growing inventory. They could not move. Boats ordered 18 months earlier arrived into a completely different market. What seemed like smart ordering during the boom became crushing overhead during the bust. The false boom created today's crisis. Dealers are stuck with aging inventory financed on floor plans. They must discount heavily just to move units. Each sale loses money. But holding inventory costs even more. The boom mentality led directly to the current collapse. Floor plan financing is crushing dealers. These short-term loans let dealers stock inventory without paying up front. But interest accrues daily. Boats sitting unsold generate mounting costs with no revenue. Interest rates on floor plan loans jumped from 3% in 2021 to 8% by late 2023. A $50,000 boat now costs $11 per day just in interest. After 90 days, that is nearly $1,000 in pure carrying cost. After 6 months, $2,000. Marine Lenders Association data shows average dealer inventory age jumped to 137 days in 2024, up from 68 days in 2021. Dealers are paying double the interest for twice as long. The math becomes impossible. To move aging inventory, dealers slash prices. A boat with $50,000 in cost might sell for $47,000 just to stop the interest bleeding. The dealer loses $3,000 plus months of carrying costs, but keeping it costs even more. This pressure feeds the used market collapse. Every fire sale pulls down all comparable boats. Private sellers see dealer prices and must drop their own. Banks holding used boat loans watch collateral values fall below loan balances. Repossessions are climbing. When owners default, banks seize boats worth less than the debt. These repos flood auctions at rock-bottom prices. In the third quarter of 2024, boat repos increased 29% compared to 2023. Each repo drives values down further. The debt spiral is self-reinforcing. Falling values increase defaults. More defaults mean more repos. More repos crash values even lower. Dealers and owners are trapped. Modern boats carry sophisticated electronics that become obsolete fast and break expensively. Multifunction displays, digital switching systems, and integrated networks add appeal when new, but they create nightmares in the used market. A failed Garmin or Simrad display can cost $2,500 to $4,000 to replace. Digital switching modules run $800 to $1,500. Joystick docking systems need specialized service that costs $200 per hour. These aren't maintenance items. They are expensive failures waiting to happen. The problem hits boats from 2020 to 2022 buying rush, especially hard. Manufacturers installed complex systems without proper testing. Software bugs emerge years later. Components fail early. Replacement parts can take weeks or months to arrive. Tech also makes boats harder to repair. Simple mechanical systems that any mechanic could fix have been replaced by computer networks that require dealer diagnostics. Independent shops cannot access proprietary software. Owners face mandatory dealer service at premium rates. This complexity kills resale value. Buyers fear expensive tech failures on used boats. A boat that is 5 years old with a $7,000 electronics suite might need $4,000 in upgrades just to stay current. That fear suppresses what buyers will pay. Simpler boats are holding value better. Basic center consoles with analog gauges and mechanical controls find buyers faster. But premium boats loaded with technology are seeing the steepest value drops, often 35 to 45% in 3 years. 6 brands face existential pressure in this collapsing used market. Their combination of oversupply, quality issues, and poor resale creates perfect storms. Bayliner flooded the market with entry-level boats during the boom. Values are dropping 40 to 50% within 3 years. Buyers now avoid them entirely. Dealers refuse trade-ins. The brand that brought millions into boating might not survive the used market collapse it helped create. Four Winds faces similar problems. Their 2020 to 2022 models carry quality issues that surfaced fast. Resale values crashed 35 to 45%. The brand lost the reputation it spent decades building. Recovery looks unlikely. Chaparral built a reputation on value but expanded too fast during the boom. Quality slipped. Their used boats sit unsold for months. Prices drop weekly. The mid-market segment they dominated is evaporating. Brand loyalty is not saving them. Sea Ray represents the premium brand crisis. Even the name cannot hold values anymore. Sundancers and sport yachts from 2021 and 2022 are losing $40,000 to $55,000 in 2 years. The brand's decline accelerates as used inventory floods the market. Regal faces the same premium segment collapse. Their boats depreciate that faster than financing schedules. Owners are trapped underwater. New buyers will not pay previous premiums. The brand's value proposition has vanished. Hurricane expanded production dramatically but could not maintain quality. Their deck boats from the boom years carry defects that kill resale confidence. Values are falling 30 to 40%. The brand may not recover. These 6 brands share common threads: overproduction during the boom, declining quality, and no pricing power in the used market. Survival depends on conditions that are not coming back. A real family in South Carolina bought a 2021 Chaparral 23 SSI for $62,000. They put $12,000 down and financed $50,000 over 10 years. Today, that boat is worth $38,000. They owe $46,000. They are underwater and cannot sell without bringing $8,000 in cash just to clear the loan. Another owner in Texas purchased a Sea Ray Sundancer in 2022 for $195,000. He financed $160,000. The boat is now worth $135,000. He still owes $152,000. To sell, he needs $17,000 in cash he does not have. So he keeps making payments on a depreciating asset. Trapped. These are not isolated cases. Marine industry estimates suggest 40 to 50% of boats financed in 2021 and 2022 are now underwater. Hundreds of thousands of owners owe more than their boats are worth. Some owners face repair bills that exceed boat values. A Bayliner owner in Michigan needs $4,000 in engine work on a boat, worth $12,000. The repair is not worth doing. But he still owes $9,000 on the loan. He is trapped. Others simply walk away. They stop making payments and let banks repossess. Credit scores tank, but the financial bleeding stops. These strategic defaults are climbing. Each one adds more inventory to an already oversaturated market. The human toll extends beyond money. Families who bought boats for quality time together now face financial stress instead. The dream became a burden. Marinas are seeing unusual patterns. Slip vacancies are rising in markets that normally have waiting lists. In Southwest Florida, marina occupancy dropped from 97% in 2022 to 83% by fall 2024. Owners are abandoning slips they can no longer afford. Service departments face opposite problems. Backlogs grew as boats from the production rush need warranty work and repairs. A Virginia marina reports 800 hours of backlogged service. They cannot hire enough technicians. Wait times stretch to 6 to 8 weeks for routine work. Dry storage lots are filling with boats that rarely move. Owners pay monthly storage, but use boats infrequently or not at all. They are delaying the decision to sell at a loss. These ghost boats occupy space and generate minimal revenue beyond storage fees. Coastal economies feel the impact. Boat sales fuel entire business ecosystems: canvas shops, detailers, marine suppliers, fuel docks, and waterfront restaurants. When the used market collapses, these businesses lose customers. In communities where boating drives tourism, the slowdown hurts tax revenue and employment. Marine industry jobs are declining. Service technicians and sales staff face layoffs. The ripple effect touches far beyond boat dealers and owners. Even strong markets like the Great Lakes and Pacific Northwest show stress. Inventory builds. Prices fall. Optimism fades. The used boat collapse is becoming a broader marine industry recession. Reset path. The market finds a bottom and stabilizes. Inventory clears through steep discounts over the next 12 to 18 months. Dealers who survive emerge leaner. Production drops to match realistic demand. Quality improves as manufacturers focus on fewer units built better. By 2026, values stabilize at new, lower levels. Buyers return cautiously. The industry rebuilds on sustainable fundamentals. Indicators pointing to reset include repo rates plateauing, auction prices firming, inventory age declining, and floor plan delinquencies dropping. Reckoning path. The collapse accelerates. More dealers file bankruptcy through 2025 and 2026. Major brands disappear or get absorbed. The used market stays flooded with inventory nobody wants. Values keep falling. Private owners give up and walk away from loans. Banks stop lending for used boats entirely. The industry contracts by 40 to 50%. Only premium brands and entry-level segments survive. The middle market dies completely. Indicators pointing to reckoning include repo rates still climbing past spring 2025, auction prices hitting new lows, dealer closures accelerating, and manufacturer production cuts exceeding 40%. Current data suggests we are heading toward reckoning. The forces crushing the market are not easing. Inventory remains massive. Demand stays weak. And the bubble of boats from 2020 to 2022 will haunt the used market for years. Watch inventory age at your local dealers. If boats sit more than 180 days, the market has not bottomed. Dealers are still hoping for better prices. When inventory age drops below 90 days, movement is returning. Track auction prices for comparable boats. If values keep falling month over month, the collapse continues. When auction prices flatten or tick upward for 3 straight months, the bottom might be near. Monitor repo listings. Search online boat classifieds for bank-owned boats. If repo inventory keeps growing, owners are still defaulting. When repo listings decrease, financial pressure is easing. Check spring selling season strength. April through June normally drives boat sales. If 2025 spring sales disappoint, the market remains broken. Strong spring numbers would signal recovery beginning. Watch manufacturer production announcements. If major brands announce further production cuts beyond 30%, they see continued weakness. Modest production increases would indicate confidence returning. Finally, track interest rates and lending standards. If marine lenders tighten requirements or raise rates on used boats, they are worried about collateral values. Easier lending terms would show banks regaining confidence. These signals will not all turn positive at once, but watching them together reveals whether the market is finding bottom or falling further. The sun sets over a marina in Charleston. Rows of boats sit silent in their slips. Many have not moved in months. Price-reduced signs flutter in the breeze. This is the used boat market in 2025. A reckoning nobody saw coming, and few will escape unscathed. 6 brands face extinction. Hundreds of thousands of owners are underwater on loans. Dealers struggle to survive. The market that boomed so dramatically is imploding just as fast. The boats remain beautiful, the water still calls, but the math has changed completely. What seemed like safe investments became financial anchors. The American used boat market must reset before it can rebuild. The collapse continues. The signals point toward more pain ahead, and the industry will look completely different when this reckoning ends. If you want to track this collapse as it unfolds, subscribe to Fleet Watch. We will keep watching the market, the brands, and the forces reshaping the entire industry, because this story is far from over.